Ever imagine a house party that turned into a bouncy castle disaster? That's what happened with China's housing market. China's housing market soared like a rocket, dreams reaching for the sky. But what goes up must come down. And the landing wasn't pretty. Back in late 1900s in China, owning your home was like finding a pot of gold at the end of a rainbow, nearly impossible. The government provided housing for everyone, but as China's economy started booming, people began dreaming of having a place to call their own. Then came the big moment. The government decided to shake things up by offering folks the chance to buy their government-owned apartments at meager prices. Fast forward to the 1990s, and China was buzzing with excitement. The government changed the tax system, and local governments needed cash. And fast. So what did they do? They started selling land like hotcakes, and developers couldn't resist the opportunity to build houses more quickly than you can say, home sweet home. But here's where things get interesting. Instead of the gradual payments we're used to, Chinese buyers had to cough up a big chunk of cash up front. This cash frenzy fueled even more building. And soon, it felt like everyone was in on the real estate game. But as we know, what goes up must come down. The government stepped in, urging developers to slow down the spending. And then, when things were heating up, the pandemic hit, throwing a curveball that nobody saw coming. Suddenly, fewer people were in the market for houses, and the bubble burst like a balloon at a birthday party. By the end of 2023, house prices took a nosedive, leaving developers scratching their heads and wondering what went wrong. The government tried to soften the blow by offering loans and support, but the damage was done. China's housing market was in a financial pickle, owing a mind-boggling $8.29 trillion. One big reason things went haywire was that the government relied heavily on selling land to make money. When local governments needed cash, selling land became a quick and easy way to fill their coffers. This led to a development frenzy, with developers snapping up land left and right to build more and more houses. Another factor was the perception of guaranteed returns. In China, owning property was a surefire way to make money. So instead of investing in the stock market or other ventures, people poured their savings into real estate, driving higher prices. And let's remember demographics. China's population is getting older. This means fewer young people are looking to buy houses. The pandemic messed things up, making folks wary about splurging on big purchases. Things are all right. Even though the housing market took a tumble, it's slowly getting back on its feet. The government's stepping in to help out and to ensure prices don't go crazy again and another bubble doesn't form. It's a work in progress, but there's hope for the future. And with the economy bouncing back from the pandemic, there's hope on the horizon. So what can we learn from China's housing market saga? Well, for starters, it's a reminder to be careful with our money and not get swept away by the excitement of a booming market. It's also a lesson in the importance of regulation and oversight to prevent things from spiraling out of control. But the most fantastic part of this whole story? The people of China! Even though the housing market went wild, they kept going. That's the spirit of China, working hard and building a better future for their families, no matter what life throws their way. Now that's inspiring. Remember, even the craziest journeys, like the ones we just took, can teach us something new. Keep exploring the exciting world of economics with us by hitting that subscribe button.